friends, it's really interesting to look at Ifast's latest results. While the majority of current fee income made by Ifast is very different from that of Tiger Brokers, it pays to have an idea how the general industry is performing. Ifast saw a decline in revenue both on quarter-on-quarter performance as well as year-on-year performance. Revenue is down 5% year-on-year and slightly below 5% down on quarter-on-quarter basis. But this isn't the big worry right now. The big worry right now is more on the general market sentiments and the market conditions that impact on the asset under administration of Ifast. Is the surge in operating expenses by around 8% as compared to the last quarter worrying? This was explained using the 4-year business plan, where the company has to prepare for the expansion for incurring more operating expenses. Why is that an expansion? I will explain more. Net profit declined almost 35% compared to the same quarter last year, as around 20% decline from 4Q2021 results. Right now, the market has to see through the short-term headwinds, given that the Hong Kong ePension has been projected to make at least 60 million SGD, 40 million SGD, and 80 million SGD from 2023 to 2025. That's a good number. This project was won in 2021 together with its partner, PCCW Solutions. Near-term wise, this should provide stability to the profit numbers of Ifast despite market uncertainty with equities market pullback, bond market pullback, because its unit trust business is likely to take a hit as a result of weakening financial market conditions. This was also why asset under administration fell 2% compared to the last quarter. There was a decline in inflows as compared to previous quarter, which has more than 700 million SGD of inflows, but this quarter is less than 700 million increase. Singapore still remains key contributor to its revenue and profit, and its pullback in 1Q2022 could potentially be a result of increasing competition from competitors like Tiger Brokers and Futu. For Tiger Brokers, it has its own funds more as well. The saving grace right now is that Tiger Brokers and Futu may not have won a big portion of the fund business in Singapore yet, given that Ifast has a head start and has been in Singapore industry for very long. It is noteworthy that Ifast recently did a fundraising exercises that raises more than 100 million SGD to pay for the cash required to acquire a UK digital bank. In the net cash position and with positive EBITDA, Ifast should be reasonably safe in terms of financial position, but price structure wise, Ifast is really at the cost road right now at around 5 SGD. The big problem is recent market volatility could still bring a down leg or maybe a few down legs for Ifast share price. This is definitely a scenario that has a higher probability of occurring right now. I will reassess Ifast again in future should Ifast hit below 2.5 SGD. I will appreciate the viewers to subscribe to my YouTube channel if you like my content. As always, this should not be construed as any investment or trading advice. Thank you.